Hello everybody, welcome to the Trader Merlin Show. It's your Tuesday afternoon edition. Hope you had a great trading session out there. Hello Nick, Tomasina, Ruben, Big Eb. Hope you're all having a great trading session as well. Probably a lighter show today. No guests on the program, and who wants to watch a Q&A session, right? Well, we'll have make the most of it as we can for today. I've actually got some pretty good questions. A lot of people have been asking me about how I start my day, what I look for from a trading perspective. So I'll share some of that with you guys, see how you like it, maybe get some thoughts on what you guys are looking at as well. All right, today's trading activity, pretty damn good. I mean, unfortunately, the one security I was looking at, which was Costco, I really had a long play potential panning out for Costco. Did not come to fruition. Oh, well, I'll show you that one as well. But let me start you off with the market update, just so we can take a peek at all those different numbers and markets that came out today. Almost everything across the board was positive. Of course, I was including the 10-year in here, but I've kind of omitted that one now just because it's just really stuck in this weird sideways range for a long time. So I'm going to move over and get off the 10-year. We will look at gold to start things. Up 0.45%. Obviously, nice to have it up 0.45%. But when you look at the chart, really nothing noteworthy from a technical perspective. No strength, no weakness, just really sideways for the past 3 trading sessions. But if you're holding GLD or gold, there you go. A good one. All right. Let's move on to your Bitcoin chart, which is a little bit better. Still kind of sideways action, but you have that nice long bottoming tail on that hammer formation from yesterday on Bitcoin. That put it up to 1.01% gain today to 95.35. All right, NASDAQ back at kissing 10,000. It's very, very close today. You can see that intraday, I'll even mouse over so you get the exact number here. Intraday, we hit a high of 10,001. So we were really 1 point over that 10,000 mark there for the NASDAQ 100. That was a 1.74% gain, finishing the day at 99.59, up 170 points. So just some crazy moves out there. S&P also, I mean, you're looking at a market that's moved 200 points in under 24 hours. Pretty unbelievable that we had such robust moves. But hey, it is what it is, and it looks like it's going to keep on trucking here. So 1.76% to the upside for the S&P 500, 31.16. And yeah, I wanted to show the 5-minute here just so we can take a peek at the let's do a 15 just so you guys can see that rally in the futures market. When we look at something like the SPY, we really don't get a chance to see it, but I want to draw it in here. We'll go from these lows that we established at about midnight the night before last. And in just a little over 24 hours, you're looking at 7.9% move on the S&P. That's incredible move. Of course, we saw some very wild swings today, a lot of this on economic data. We mentioned this yesterday, or at least I mentioned it. I thought, you know what, we really could see this retail sales numbers come out much more positive than expected. And if that does happen, you'll see this market go just sky high. And that's what we had today, although it's rather interesting. The number for retail sales, if I'm not mistaken, came out at 5:30 Pacific time, which is 1 hour before the market's open. So check out this chart here, and I will zoom in a little bit, and I'll put a vertical line right on that 5:30 mark when that number was supposed to have come out, and we will get it right there is where it came out. Right. So you can see when that announcement comes out for retail sales, which I'll show you the number here in just a second. It was great. You know, just stop teasing you. I'll just show you that number right now. Here is your retail sales number. They were expecting it to go to 5.5%. Now you remember, 7.9%. Remember, it was negative 14.7, which was crazy. I've never seen that before. Today, we actually showed pretty good numbers. It was a gain of 17.7%. This, I think, kind of keeps going back into the theme that I've been posting on the chart of the weeks, which is spending. A lot of us really, batten down the hatches, so to speak, and locked down our spending and said, hey, I'm not going to spend a lot of money. We were saving. We're also collecting money from whether it's unemployment, getting stimulus checks. All of a sudden, all this capital's there. Now, all of a sudden, people going, I want to buy. And of course, Amazon being one of the major recipients of that. But now you're seeing a lot of other businesses really do well. 17.7% increase in retail sales. That is part of the reason we saw these markets vault. But wait. Why did it do this? It spiked for literally 30 minutes, hesitated, and then all of a sudden really started to sell off about a little an hour into the market. It really just had a big sell-off. Lots of talk about infrastructure projects. I know Joseph put that out there, the infrastructure spending catalyst, which Trump is talking about doing $1 trillion infrastructure package. Certainly that would be a big bump up for these markets and more money pouring and pushing these markets up. I think to a comment that was mentioned here from Brendan, says stock market feels toppy. It certainly does. However, again, you have this kind of capital and this much money pouring into the market. If in fact we we find out in another week or two that coronavirus really is not that big of a deal and everything goes right back the way it was, again, 4,000 Dow would be not 4,000 Dow, 4,000 S&P would be easy to achieve. I mean, that'd be a 30% increase. Yeah, it could easily happen in a period of months if it is smooth sailing after all this, because you have everything back to normal and plus trillions of dollars of capital behind you. Boy, it could be one of the biggest bull market rips we've ever seen. I hope it doesn't happen like that, but at least my downside is limited on that put position I have. All right, let me go back to these charts and keep on going. Crude oil was your next one. We went from 1.76 for the S&P 500 to 2.18 for crude oil. $37.93 is where it's at right now. Technically nothing overly dramatic. We're probably going to have a challenge at this $40 mark like we did last week, and I think we'll probably rip through that one and set some new highs here, at least shorter term highs for crude oil. All right, Russell 2000, the R to the T to the Y, third day in a row with a nice green candle. This one gave back quite a bit near the end of the session, but all in all, Russell was up 2.3%, closing at 1,450, and just a beautiful uptrend for this one, bouncing off lows and just keep on making higher highs since mid-March. So a great run here for the Russell, which takes the number one spot for your market update. All right, I'm going to spend most of the program going over live questions, so if you guys have some, feel free to send those in. Pro35 says, how much of this is retail FOMO, fear of missing out? I think a lot of it is fear of missing out, especially Mr. Garcia. I think Sam Garcia sent in an email the other day talking about the news agency saying, look, if you're not on board right now, you're missing out. You know, these markets are going to be ripping higher. That creates that kind of fear of missing out, and of course capital comes pouring into the markets, and there's a lot more money out there. I think a lot of it is that I wouldn't put all my eggs into that bullish market basket at this point. Again, I'm still waiting on the Q2 earnings, which will be in July. To me, that will be the real determinant on what my bullish or bearish stance is going to be at that point. All right, let me go to listener questions here. I will dive into these as we progress through today's show, because today's show is going to be predominantly Q&A with me, Trader Merlin. All right, here's where I'm going to start. Natalia sent this one in a couple days ago, and yeah, you're right. I see the comment coming in here that, infrastructure, Caterpillar, Nucor, Vulcan Materials, Martin Marietta, yeah, those companies will probably do rather well, just based off of the prospect of that announcement being made. So those are good options there. Natalia says, I keep hearing institutions have to sell if price gets below the 200-period simple moving average. Do this at 50 simple period moving average. Make tiramisu below the 10-period simple moving average, and blah, blah, blah. Can you explain how various period simple moving averages are used by the big players? Sure, I will gladly do that. Now, there is no set rule in stone as far as what an institution may do. What made me really want to study moving averages and understand moving averages when I got into this early on in my career was I read a prospectus when I was working for a financial planning company. And in the prospectus of this mutual fund, it said in black and white, they are not allowed to hold positions long if they're below the 200-period moving average. And I thought to myself, I'm like, well, crap, this is a huge factor, right? If an institution that's a mutual fund that's going to be holding, millions of shares, if that security drops below its 200-period moving average, then it should be a very predictable reaction that as soon as it closes below that, then all of a sudden it will start to sell off because they have to unload those portions of their portfolio. Now, I don't know how clearly they adhere to those rules, but that's the rule in the prospectus, which, is kind of the law that they have to follow. I don't know what they do behind the scenes. I can't tell if they actually follow those rules, but that was very interesting to me when I read it, and I come to learn that a lot of mutual funds had a similar practice. So what do we mean by the simple or 200-period simple moving average? Well, we've got, obviously, what do we got here? The Russell 2000. Most of the time, this is going to be on like a weekly or a monthly when they're looking at these longer term time frames. So you can throw on a moving average at any point. And for those that do not know what moving averages are, just feel free to type in the chat, say, hey, I don't know what a moving average is, and I will cover that. Otherwise, I'm going to go right over. This is probably the most common one. This is the one I use the most, which is simply a 20-period moving average. All this does is tell you the average closing price over the last 20 bars of data. Since this is a weekly, it takes the last 20 weekly candles, and I'll show you exactly how many that is, just so we can do a math class. I think 20 is probably going to bring me back to here somewhere. Let me show bar count. One of the things I like about TradeStation is its actual labels are really easy. So there's 16, 17, 18, 19, 20. Okay. So you can see I've got this black line representing the last 20 bars or 20 candlesticks. It takes the closing price of each of those candles, adds them all together, and then divides by 20, and that is this result here. It's 1,342.76. That's your 22 or 20 period moving average. Of course, you heard, I believe it was John Rowland was on the program the other day saying why 20 period moving average is important, and that's because, well, institutions are used to a calendar month, and 20 period moving average is about 20 trading days in a month, so it gives you an estimate of how it's traded over the past month. Now, the 200 obviously is the big line in the sand. That's one that the big institutions are going to be using. As far as the 50s, the 20s, the 10s, the 8s, the 80s, the 33s, it's like how much salt do you want on your salad? How much salt do you want in your food? It's a matter of personal preference. Now, I will show you one thing very interesting. I've been following Adobe for a little bit, and I think their chart is just unbelievable. It's one of the most beautiful charts ever. I would never have thought that ADBE would have a chart that looked like this. And let me show you a monthly here just so you guys can see the chart of Adobe going back into my early days of trading in the 90s. I wish I would have just bought and held. You can see here, I'll go all the way back to 2001. So it's not going back quite to my trading days. Let's go back to, I'll change it just a little bit and go all the way back into 1998 when I really was a very, very active day trader, just so we can see the picture. All right, so we've got all the way back into 1998. I took my first online trading academy class in June of 1998. As you can see here, Adobe was trading at a split adjusted price of $5. $5. I wish I would have held that one. Ruben, you say you love Adobe. It's the future. I'm not quite sure why it's the future. Maybe I just don't know Adobe well enough. I was always used to it as being, graphics, animations, machines, design stuff. But boy, I tell you what, if that's not a beautiful chart, I don't know what is. It's just absolutely gorgeous. Anyway, let me go to the moving average discussion, because this thing has been on one of the most beautiful uptrends ever. When I saw, it over the 400 mark, I just couldn't believe it. Let's go to the daily. And here I have that 20 period moving average. So all this is doing is taking the last 20 days close, dividing it by 20, and giving us our 20 period moving average. So what I love about this is you haven't had this thing close below the 20 period moving average since back in April. Beautiful uptrend here. It's one of those things where the old adage, the trend is your friend till the bend at the end. And this one is perfectly tailored to the 20 period moving average. Sometimes it works on different time frames. I'll give you an example. One of my friends on the East Coast, he'll take a moving average and he will find the chart that's trending. So guys, give me any symbol out there. Throw out a symbol that you want me to see moving average. Go and just type in any symbol that you want me to check out, and I'll do it because I draw blanks. Preferably something that's got a good trend, right? Because that's really what we want to use moving averages for, is trending securities. Of course, we could make the argument that everything is trending right now, but I figure incorporate in some of your suggestions. What he will do is he will take his moving average once he finds a security that he's thinking about buying, and he will dial it down. So maybe it's on a 20 period, but it's not quite hitting all the lows. He will go and he will, all right, Joseph, you were first with IBM. He will tweak it to fit that moving average. Now, I can tell you right now, nothing's going to work for IBM because of the swings. If anything, it's not going to work for IBM, but I'll do it. So what he would do is he would grab his moving average here. You can see that the moving average really is not helping. If we went longer term, it's probably going to do better. So let's go and try an input of, let's say, 50. Unfortunately, I have to hit enter every time to get this thing to update. He had a specific software where he would just tweak the numbers, and you could up and down by 1 point or 2 points. Let's see if this works on, it's IBM MRO. I'll go down the list here. All right, much better. So you can see we've clearly got an uptrend here, and it's going to be tricky because this little drop down right here where you see my cursor, that's going to tweak the moving average. It probably closed below it on this red candle if I throw this back to a 20 period moving average. I've seen moving averages for so long. Yeah, and you guys can see it was working great, and it just dipped right below it on that one red candle, would have gotten you out, and then ripped to the upside. So what he would do, and if I were to adjust this a little bit more and add some time to it, what you'll get is it may actually suck up closer to this low here on this MRO, to that April low, and then also incorporate in this low from June. It's tricky because this was a big sell-off here in late May on this one. But let me see if I bump this maybe to a 30. And I know people are going, I'd never use a 30. Well, it's not the point. The point is I might be able to get this thing to fit the picture better and incorporate in this new low that it's put in. I know it seems like a weird strategy, but it's actually, remember, each one of these securities is like its own separate animal. Okay, so there you go. If I do a 35 period moving average, which is a bizarre one that I wouldn't normally use, you can see that I've picked up that low point from late May on MRO. It also came very close yesterday. And so I might actually use this for this security as my moving average to help keep me in that trade, if that makes sense. It's, to me, moving averages, if you've ever been to Disneyland as a kid, there's this one ride where you actually get to drive a car. Of course, you don't get to drive a car until you're 16 or 17 or something like that nowadays. But there's that one ride where you're driving the car and it actually turns the steering wheel. Well, I thought this was the greatest thing, but you realize that basically the car is sitting on a concrete track and the wheels won't go over the track, so you can turn and bump it, but you're basically going to go wherever that path takes you. Moving averages I find to be somewhat similar. If you find the right moving average for security and it's in a nice trend, it might stay there for a long period of time. And if it is, stick with it. Let's go to Daniel wants Apple. What I should be doing is I should be bringing these up here and not having the moving average, and I will tell you what I think the moving average is doing. This is probably going to be below 20 to be snug for this one. It's just got such a strong uptrend. Yeah, I think you even go below it. You can see it's really following. It's down to 14. We might be too aggressive. Let's see. How's it look? There you go. So if on a 14 period moving average, which I would normally not use, you have Apple is just stuck to it right now. So if I'm going long Apple, I would use that 14 period moving average as a stop loss, or a trailing stop in this case. Again, it's going to be different for every security. They all have their own paths, and sometimes they don't even have a trend. Let's look at Tesla, TSLA. All right, so I think you guys can see what I'm going to do right now. You can tell that it's been, if we use this 14, it's not quite working, right? It's this dip here on the first day of May is going to be a problem. That no matter what, that's going to tweak a moving average. But I might be able to tweak it to get it to fit a majority of these points. So it's probably looking to get most of these points. It's definitely back to 20, and that's probably going to hug most of them. There you go. So there you go. So now I've adjusted Tesla back to a 20, and you notice all of a sudden, Tesla is now riding that blue line, has not closed below it since April. Again, all I'm doing, good afternoon, Jorge. All I'm doing is tweaking this just a little bit to get it to fit. I know it seems a bit odd because you're taught that I want to stay with a 50, a 20, a 40, a 200 period moving average. Those are great, and here's why a 20 period moving average is so good. Same with a 50 or a 40 period moving average. They're great because you have a lot of people are using moving averages to trigger for their trades. So if someone's going to be using a moving average as a trailing stop loss or as a decision piece for their trade, it is almost a self-fulfilling prophecy. It helps you in understanding when the retail trader is going to be selling. So let's go. I'm going to do a couple more here just because you guys have asked. Chris says UAL, United Airlines. Oh, not much is going to help you here, brother. This one doesn't. I mean, and this is a good point. Bringing up UAL. If we look at this UAL chart, do you really think it needs a moving average right now? I mean, you could say a new trend has started. What I'm going to have to do is I'm going to have to shorten this down a little bit to get these points involved. Yeah, this is a tough one. Drop it out. Yeah, I'm not going to be able to tweak this one to get it to go because of how abruptly this thing has been swinging. Of course, we know it's one of the most volatile securities out there right now, simply because of its bankruptcy talks and potential. So it's not going to work on this one, Chris. Sorry about that. Pro35 says Alibaba. All right, why not? Okay, now one of the challenges here is it's so far, if I use this 30 here, it's most likely going to be a 50, would be closer to it, because I need to give it some time to start to adapt to these levels. The problem with using this moving average like this is when I go so long term, like a 50 period moving average, it's taking a long time to get it to work, right? It's taking driving and listening. All right, welcome to the road. Are those real trades in UAL on your chart? Did I have trades listed? Yeah. I sold puts on UAL. I sold some puts when it was up at, I think it was 30 something. I don't know why does this look so weird. Yeah, but those are real trades on mine. Anyway, let me go back to Baba. So anyway, do you guys find this interesting at all? Is it boring the hell out of you? You know, it's an approach I don't think a lot of people do, which is tweaking and adjusting things to make them fit. Spirit Airlines, I think all these airlines guys are going to have the same basic picture. These moving averages are not going to fit it right now because of the volatility. And unfortunately, when we have things that are so volatile, a lot of the indicators, whether it's Bollinger, Stochastics, MACD, all that stuff, they get thrown out of whack. It needs to come back to some semblance of a normal trend. Right now, it's not really a great trend. It's a lot of chop, granted bullish chop on UAL and Spirit, but all in all, not that great for these guys. All right, what else do I got? Couldn't you, in theory, be adjusting those moving averages and making your own self-fulfilling prophecy? Yeah, that's a good one. Good point. That's from Real Trading 24/7. You could. However, how many people are going to use... When we looked at that, I wanted to say it was Tesla. I can't remember because we just looked at a bunch of charts. But we looked at like a 14-period moving average. The vast majority of people are not going to be using that. Why? Because in many cases, the defaults are set at 20, 40, 50, and 200. Those are your defaults. So most novices, they don't know squat about trading. Sorry, I'm trying to curb the cursing. I know some people want their kids to watch and they say I curse too much, so I'm trying to curtail that. Dab nabbit. They're not going to be using that moving average. They're going to just stick to the default. So while I may be creating my own self-fulfilling prophecy, I think there's much more value to keeping them at their defaults. Now, there's two schools of thought here. There's my school of thought, which says, hey, I'm not worried about the masses. I'm worried about what price action is doing. In that case, I'm using those moving averages to hug price and get it to where that security is trending with. I don't know the characteristics or what's really driving that price, but if it follows the 15-period moving average to a T, I don't care. I'm sticking with the 15-period moving average. Whereas it might be beneficial to also look at the 20-period moving average because a lot of retails, and as Brendan points out, algos, algorithmic trading systems, are using those for signals as well. But most aren't tweaking and using really bizarre numbers. I found it very interesting and beneficial at times to adjust to a very specific moving average to tailor to that stock. Brian K., thank you so much for the contribution. Thank you, my friend. I appreciate it. Always a pleasure getting some contributions, and it's a vote of approval from you out there. I do appreciate that. Thank you so much. Thank you. I'm glad you love the show as well. I love doing it. It's funny, I got a really interesting email the other day from a viewer, and he was saying, look, I love all the hard work you do. You give out some great content, and I don't have to pay $5,000 a month to get the same levels. So I thought that was kind of funny. Okay, let me keep going on here. There's more. Was there one more? Yeah, and Tom says, I'll start adjusting moving averages to fit as some stocks don't move. Yeah, right. And just try it. You know what I mean? It's not like saying, hey, I need to change my entire trading strategy, especially if something's working for you and your strategy is great right now. I wouldn't mess with it. I might tailor it a little bit just to see if I could tweak it and maybe I get better results. But, you know, you got to be careful when you start making adjustments to something that's working. But I think that if you are a moving average guy, find the moving average for that security. Remember, it's like saying energy levels in human beings, right? Not the Rubin kind of energy level. I mean just actual energy, like actual, how fast they move. You can tell I usually have a lot of energy. But there's other people that are very, very calm and subdued. Well, that's a different moving average. And I have to use tools differently to read or interpret what that person is going to do because their energy level is very different. So, let's see, what else do I got? In your opinion on the death cross okay. Death cross and golden cross, right? These are two. This is a very simple one. And let me bring it up here and I will change these moving averages. I need to add another one on the screen because these are two moving averages together. So let me add this two-line moving average here. I'm going to take this one off. And let me, as I disable this guy, let me explain what this is. A golden cross is where the 50-period moving average crosses above the 200-period moving average. It's very, 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 very lagging, right? One of those things that for them to form, it's going to take so long to happen. It's just, I don't know, it's so lagging it blows my mind. But people like to do it as that ultimate line in the sand. And if you're not on that direction, you're late to the party. So here I've got two moving averages, and I'll make these bigger and brighter for you. And bear with me as I change these colors here. We'll make that one, I don't know, whatever color that is. Yes, I'm colorblind. And I'll make these both a little bit thicker. Okay. So I have, is that green? I think the top line here is green, and then the bottom one is blue. When these cross, those trigger signals for people out there. Some love it, some don't. I'm not a huge fan of it. I just feel like it's one of those ones we should pay attention to because the masses and algos and hedge funds are watching that. So let's go to, how about I go to Amazon? Why not? So Amazon had a golden cross. And a golden cross is where that 50, which is the blue line, crossed above this green line. And it basically what it told you was that's a point that you most certainly want to be in. All right. Well, here's the challenge. If you guys can see the screen here, this little cross point where these two lines intersected, and let me do some artwork out here. Okay, we got that. It's right there where those lines intersected. People think that you're going to be able to buy at that point. No. You're not going to be able to buy at that point because that point would have been $1,835. If you were buying when those lines crossed and deciding to go long, that would be on the closing of this candle here, which would have put you at roughly $2,047. So you're losing $200 or 10% on that one already. Now, the point where you should be getting out of this is where this 50 period moving average crosses below its 200 period moving average. That's what's called the death cross. I'm not a big fan of it. I believe it's so lagging. I think that at this point here, you should have already been long Amazon long before this, right? I think that there's probably some argument to get long Amazon down here in middle of March because of the retail side of this. But a lot of people like these golden crosses and death crosses. I'm not a huge fan of it. I'm going to bring up a couple other symbols. What's one that's just been getting? I like Macy's. Speaking of death cross, let's go to Macy's. There hasn't been a death cross on here because it's been in such a bearish downtrend. Prices never moved above the 200 period moving average. That's a great one. I mean, this thing has been living the death cross, but it never actually had a death cross. Oh, I know that was a bad joke. Let's see, what else do I got? Let's go to, you had some other ones. How about Shopify? This one's a crazy stock. Again, it's been in such an unbelievably strong uptrend. It's 50 period has not crossed below its 200 period moving average. And while that may not seem like that big of a deal, look at the swings here. I'm going to draw on the screen here just to give you an example of how absurd this is. This, whatever blue circle I just drew, is roughly $600. It fell from $600 all the way down to $300 in a period of a month. And you still didn't get a sell signal. Let me repeat that. This thing fell 50% in a month, and you didn't get a sell signal with the golden cross. I'm saying here we go. I'll show you what to do with it. You grab one of these, it's a garbage can, and you just throw it in there and leave it alone. I think it's great when you have something that's an extremely strong uptrend and it starts to have that cross. Remember, it's going to take 50 days at least for that period moving average to start to curl. So I think they're way too lagging. I think if you're a long-term investor, let's say something like strategic investor, then maybe it's okay, but you have to have that long-term perspective in mind. All right, cool, good. Big Eb, exactly why we shouldn't watch it. I think you want to watch it, but what I don't want you to do, I want all of you to remove this from your memory, and that is this. A golden cross or a death cross creates a great trading opportunity. No, it does not. It simply tells you that the huge picture trend has changed. But if you're an astute trader or someone who's watched these markets, you have already seen this happen. Let's see if it actually shows it for the S&P 500. Let's go SPY just to make it easy. Okay. Oh, this is again the reason why you leave this crap alone. Let me get some of my wonderful artwork on here. I'm going to leave these other lines on the screen, which again are my targets for the market. The 50, you'll notice, is ripping up towards its 200 period moving average. And of course, if you're looking at the 50 crossing above the 200 period moving average, that is what's referred to as a golden cross. And it says, oh, you should be buying. Really? Well, why wasn't I buying back at 230 or 240 or 250 or 260 or 270 or 280, 290? You're telling me I need to buy when it gets to like 310? I'm late to the party. Way late. And also look back here. This should be the defining moment of why you guys will just archive this, shelve it, and just go, okay, no big deal. It told you to sell this S&P when prices were all the way down to 262. We were at 323. 338. It went from 338 all the way down to a low of 218. You have a 120-point drop in the S&P, and then about a month later, it told you you should sell. So there's the garbage can. Throw it away. Okay, done. Let's go back to the screen here. I'm going to go to my next question. So there you go, Natalia. I hope that helped you out. It was a long-winded answer. I almost did an entire show just on moving averages. Philip C. sent this one and says, looking at Adobe daily candle today, would you consider it a hanging man candle pattern, and how would you trade it? For those of you who know me, you know I love candles. It's a large part of what I look for every day. ADBE. Now, I have to apologize because that was from a couple days ago. It was when this was the candle on the hard right edge. I want to make it just that. There you go. When we had this picture here, this is what he was looking at. He's saying, is that a hanging man? The answer is 100% yes. If you guys look at this last candle on this chart right here, yes, that is a hanging man pattern. I am not a big fan of hanging man. That was almost poetic out there. I'm not a fan of the pattern. Steve Nissen in his book, and by the way, thank you to my friend Tom who sent me. He actually gave me this big box of books here. Hold on. Now we're going straight to the source. Let me see. I got it in here somewhere. He gave me all these books, which are pretty phenomenal. But there's this book here. I know. You're like, what kind of production show is this? He's just digging into a box live on camera. You guys can go out and you can buy this book. I would strongly encourage you to not go out and buy this book unless you absolutely have to, because it's $100 for this book. In here, it will go through talking about the hanging man, there's double tops, frying pattern tops, dumpling tops, abandoned babies, all this crazy crap out there that you just don't need. Now, if we look at this last candle on this chart, if you just took that candle by itself, it tells you a couple of interesting things. It tells you that at one point, this was a very big red candle, and then all of a sudden buyers came back in and pushed it near the top. What I find interesting about that is that candle specifically tells me that there was bullish pressure and it's in the middle of a huge uptrend. Nissen will tell you that is a bearish sign because it showed weakness over the course of that trading session. I agree it did, but all of a sudden the buyers came back in and pushed it up and closed right near the relative high. So to me, it has a huge degree of ambiguity as far as, is that a bearish signal or a bullish signal? I wouldn't trade it. I would leave it alone simply because I don't feel it gives me enough clue as to where things are headed. Now, if that bottoming tail on this, if this tail was flipped the other way, see how this is a long bottoming tail here? If this is flipped the other way, then it'd be a shooting star. And that I would have a lot of opinions on. Yes, Chris, there's a formation called an abandoned baby. There's the falling window. There's the homing pigeon. There's the 3 white soldiers. There's the 3 black crows. I mean, there's so many of them, it's stupid. They will literally come up with a name for every single candle and double candle formation, and now they're trying to do all these triples. Forget it. If you just understand what's going on with price and that tug of war between two parties, that's it, buyers and sellers, and know how that makes a candle, that's all you need to know. All right, so I know I probably didn't answer that question, Philip, but I'm not a fan of that formation, and I wouldn't have traded it. I would have just left it alone. All right, next. Oh, you're funny, Ruben. It says, what's the difference between Forex and currency futures? We use the Dixie as an indicator? Yes. Okay, we've talked about this many, many times in the program. That question was from Matt. It says, what's the difference between Forex and currency futures? There's a huge difference out there. One is going to be the amount of leverage that you get. For those of you who are international, I know that we have some that live in Europe here that are watching the show right now. In many cases, your brokers will give you 500 to 1 leverage or more. Here in the States, you're pretty much chopped off at 50 to 1 leverage. You might be able to find 100, but I think that's pretty hard to get. So with the spot market, which is trading the actual currency, you get a much higher leverage, but you're trading on decentralized exchanges. So wherever you have your account, right? It might be, Oanda, it might be, Forex.com or some of these other brokerage firms, or maybe small mom and pop one. You're trading against that firm. It's just, you have to know that you are trading against a firm. You're not trading against a pool of individuals. Like, let's say I wanted to go trade Apple. Well, Apple, I'm going to the NASDAQ Stock Exchange, which is a centralized entity, and it's all done there. Spot Forex is fragmented. So Oanda has their own business, and in many cases, you're trading against their book. that to me opens up a lot of question marks, suspicious activity that could be going on behind the scenes. I'm not a huge fan of it. I do trade spot Forex, but it is slowly moved out of being one of my most popular assets. When we looked at currency futures, you're now looking at trading currencies on a centralized exchange, which to me removes a lot of the inefficiencies and shenanigans that go on behind the scenes in some of those markets. So I thought that would answer briefly there, Matt, the question on Forex versus Forex futures or currency futures. And yes, Dixie absolutely is a proxy. It's one of those tools we use a lot. If you want, you can go back and talk to, we had Walker Englund on the program. We had David Warner on the program. We had Sam Evans on the program. These guys are all great Forex traders, and they will tell you the same thing. The dollar index is a very important thing to follow, regardless of what currency pair you're trading. If you're trading anything with a dollar, obviously you need to be watching the Dixie. All right, how much time do I got left here? Where are we at? All right, 36 after, huh? Well, let me go to one more, and I'm going to try to keep this brief. I could spend an entire show, and maybe I should one of these days. But Rose says, can you walk me through your typical trading day? I'll keep it real simple. Basically, what I do is I run a couple scans and filters for specific situations that I like, or they're my favorite setups. And if I find something that falls into that category that says, hey, this could be a very good potential trade, I'll write it down and just give myself a little bit of a heads up so the next morning when I come in, I can check and see if any of those have come to fruition. If I really like this setup, I may actually do a set and forget order the night before if it's an equity. If it's futures, I may just make a trade in that future at that moment in time, depending on where the clock is, if you will. So generally, I hate getting up. I'm usually one that just hates getting up. I stay up way too late, and I'm just a nocturnal person from years of working night crew. So I gravitate more towards that future side of things, the Forex side of things, simply because you have 24-hour capability. However, a lot of stuff I like to do is in the equity market. So when I do get up, I'll be checking these markets. So today, one of the ones I was looking, there were a few actually. The big one was Costco. Costco was a security I was looking at, mapped it out last night. It came up on one of my scans. It had a really nice hammer formation. So I just mapped out some levels where I said, okay, if this happens, I'll buy it. Today, it gapped up. So let me, I'll just show you the Costco chart for today. Let me move these moving averages because they're not helping us, are they? We don't need no moving averages. So here's what drew me to it. It was this candle right here. I'll put a circle around it, a little oval around it. Maybe change that color. See if I can make this the default because I keep doing this one for you guys. We'll do the line. I'll make that line yellow. We'll do fill is going to be yellow, and I'll make it transparent so we don't get too crowded there. All right, now it's my default. Perfect, much better. Oh, hallelujah. I know, Chris. I don't see many likes either. It's all right. It happens. We don't mind. I get love from you guys. That's all that matters. But yes, of course, hit the like button if you can. There we go. So this right here is a hammer formation. It's at the end of a very aggressive downtrend. It's missing one thing for me. It was missing a couple things. But if we look at kind of layers of liking, if you will, I know that doesn't sound right. Look at the low here, right? It's almost the origin of this really big move up that goes all the way back to April 6th. It also is very close to the lows that we established here, which goes back to the 14th of May. So for me, my plan was if it opens up down below 292.18 or 292.12, I'm looking to go long once it breaks above 298.12. And it didn't. It just simply jumped up here and had a gap up. So unfortunately, that one just didn't come to fruition. No big deal. A lot of times I have these predefined things. There was a couple others that showed up today. I'll give you examples. I ran a scan for filters just a little, or for hammers just a little bit ago. Okay, and I'll bring up some of the symbols that came up. NKOL came up as a hammer formation. Oops, did I write it down wrong? Maybe I wrote it down wrong. NKOL. No, I wrote it down wrong. All right, OKE. All right, this came down as a hammer formation. And yes, it is a hammer formation, but it's not at the bottom of a downtrend. So I immediately move on. I don't care. Just even though it looks like a hammer, I just don't care. It would mean nothing to me. And almost everything today, PRGO, also, look at that. You call that a hammer formation on today's candle. It's the last thing I look at, as I run my scans for tomorrow. That's not going to work for me. I need it to look like Costco's or Bristol Myers was another one today, BMY. you had a hammer formation, but it wasn't as aggressive or into an area of demand as Costco was. So, today actually would have been a decent day, because how would I have traded this? You put your line across the top there. If you're going simple rule based, let me snap it to get the exact numbers. I didn't write out the numbers for this trade. So basically what you're looking for on Bristol Myers or BMY is once it gets down below 55.78 and goes back above 55.78, that's your long entry. All right, let me go see. I'll go to 5 minute. And of course, one of the things I hate in trading investing is saying should have, could have, would have. You'll notice here you had two opportunities. It opened up, came right down below 55.87 or 55.78, bounced, did it again, and now you're at 57.09. So obviously it would have been a nice intraday trade, shoulda, coulda, woulda. I did not make that trade, but it was on my radar. I was really more focused on the Costco one, which just didn't do what I wanted to do. So there you go. So that's part of my daily routine. There's a lot more to it, but I'm trying to keep things very simple. I'll generally just run a scan for specific equities. If I find something that's in a great setup, a great demand or supply zone, I'll map out that trade, maybe even put in an order in case I don't get up in time. I may also, if I really love it, be looking at the options market and be ready to get up early to make an options trade on that one because I get the extra leverage from the options side of things. All right, what else I got? I don't see any. I think that Brendan Scott says I opened a September 290, 280 SPY bear put with a solid 3-1. If we go down 10% by September, it at least doubles. I don't think that's a stretch to say we would have a 10% drop. At this point, 10% drop would be it's called a Thursday, right? I mean, it could happen very, very quickly here. Like I said, we've had almost an 8% rally in under 24 hours, or just over 24 hours on the S&P. So these moves can happen very, very quickly. It's the challenge we face is so much influx of support from the government, from the Fed, now new initiatives that Trump's talking about. I mean, these things are very, very difficult for bears. Obviously, these guys want that market to be looking as great as possible during an election year, because the market looks like garbage at the end of the year, right in your election, they might lose the vote. Rob says, what do you use for scanning? There's a software out there called Stock Fetcher. That one's fine. I'm a fan of not paying. TradeStation is where I do most of mine. I love using TradeStation, and I think I've shown you guys this before, where I use like Bollinger %B. That's one of the filters I like to use in scanning for those markets. Unfortunately, it's really lagging right now on my loading. I'm not sure what's going on here, but I run a lot of scans and filters inside of TradeStation. Right now, you can see these Bollinger Bands looking for stuff that might be oversold. I can't trade Pfizer or Biogen, which are these top two in kind of the weakest position on the S&P 500. Unfortunately, I can't trade biotechs or pharmaceuticals per my trading plan, but I actually like Pfizer. It just feels like it's basing and building strength right now, so I'm kind of curious to keep my eye on that one. But there you go. Okay. All right. I think that's going to wrap it up for... Oh, let me do this last one. Let's see. Tomorrow is Tuesday. I'm going to save this one. I'm going to leave this one hanging out here for tomorrow. And here's the question. Sorry, Kevin. Kevin wants me to answer this one. Bought a few shares of Nikola last week. What are your thoughts on it as a company? Oh boy, I'm going to let everybody stew on that one for the evening. That to me is a loaded question. For those that might not know, we will do NKLA. Here's your chart of Nikola. Okay, I think you all kind of would know what my stance is going to be on this one, but we'll leave that one sitting there for tonight. Nikola will be a topic of discussion for tomorrow, because there's a lot of really shady crap going on behind the scenes there with that company, and people love this. It also has to do with the herd mentality. We hear so much about Robinhood, right? And Robinhood being for all these individuals who just want to get one share or two shares of something and they don't know anything. Not this, Kevin. They don't know anything about the markets. And what's funny is, one of the things I learned about CNBC and Bloomberg, especially CNBC, is when somebody comes on CNBC, regardless of their area of expertise or position, if somebody's out there going, man, I love stock XYZ, and it's got this and this and this and this, and you should buy stock XYZ. No matter what, some doofus out there is going to go, let me write down XYZ. I'm going to go buy it right now. Right now. And it's just that they must know something more than I do approach. Robinhood has a feature where they basically say, here's the trending stock. And if you look at what's been going on, a lot of the stocks that just have gone parabolic and cratered and crashed have been these companies. Hertz is one of them. Nikola is another one. There's a couple others that all these, I want to say millennials, but it's not millennials. It's just people in general who don't know about markets. They're flocking to a company that pretty much said your shares will expire worthless and you're going to have no money. But yet it's become the #1 held investment over the past like 3 weeks in Robinhood. Nikola is no different, and we'll talk about that one tomorrow. Don't diddle in the middle. Yes. Michelle Volmerang. Love Michelle. I'm going to see if I can get her on the program. All right, let me show you your economic announcements for tomorrow and earnings. No. There's no way earnings. Today's earnings, maybe there are. Let me see what I got here. All right, let's go to your earnings calendar, which is this one. Yeah, there's nothing really special tomorrow in the earnings. So here's your economic calendar. For our neighbors to the north, Brendan, you guys have some big announcements tomorrow, at least with CPI. You've got your CPI index and measurements coming out for tomorrow, so we'll see how that pans out for you up there. Other than that, we've got building permits and housing starts for the U.S., as well as crude oil inventories. Now, at 9 a.m., that's Pacific time, so that's 2.5 hours into the trading session, Mr. Powell will be speaking. My guess is he's probably going to say something positive and encouraging, but you never know. He said some stuff which has caused really sharp down moves in the equity markets. My guess is it'll probably be a more positive thing. Other than that, you have Australia with some unemployment rate and employment change, New Zealand with GDP, and that's pretty much it for your calendar for tomorrow. So hopefully you guys will be on the green side of things when I see you for tomorrow's session. You need to create an inverse CNBC algo. Yeah. Not only that, but there's I've done it many times where I've done an inverse Kramer portfolio, or there's been articles where Morgan Stanley or Goldman Sachs will come out and say, you need to own these 20 stocks right now. And I'll tell you, more often than not, those 20 stocks, one of them will do unbelievably well. 15 will do meh, haven't changed much, and then you get 4 that just absolutely cratered, and overall the portfolio would be a loss. And it's like, okay, yeah, I need to do the opposite anytime those reports come out, because really it's these companies trying to pump something up so they can unload those shares. It just drives me nuts. Okay. All right, well, that will do it for today, everybody. I want to thank you guys again. As Chris says, if you like today's show, do me a favor, click the like button out there. Of course, you guys always do that. I appreciate that for the loyal viewers out there. Those who send in contributions, say thank you so much for that. Guy said, do you think that the governments are messing up the markets? I wouldn't say it's just the governments. It's the Fed. You know, we're at a point right now, and I can just speak for America because I'm not immersed in what's going on over in Europe or Russia or Asia, but anybody who would say that the government is not meddling in the financial markets here in the U.S. is clearly out of their mind, right? It's abundantly clear that the Fed is manipulating our markets. It's doing things which it probably shouldn't do. However, nobody wants to be left with egg on their face, so they are pouring so much money in to these markets. It's propping up it's almost socialism. I mean, you have the central bank and the governments making sure that your businesses don't fail. They're buying all the corporate debt, making sure those companies don't fail. You know why companies fail? Because they should fail. They got bad products, they got bad services, they got bad leadership, they got bad management. These companies should fail. But instead of letting them do what they should do naturally, excuse me, we're now propping them up even more and preventing them from collapsing, which they should do. It's like, is getting sick a bad thing? Is getting a cold a bad thing? I argue no. Getting a cold is your body saying, I received this illness to a point that I can't defend against it. But in me getting this illness, I am now going to build defenses. I'm building an immunity system within you so that next time we encounter this virus, wherever it may be, you're not going to get it, or it's not going to be as severe. To me, that's what should happen with businesses. We should learn from this, let these companies fall apart, let that corporate debt market fall apart and implode. Let it do what it should do so we can look back in history and say, that didn't work for this company in corporate debt. We'll never do that again. Unfortunately, that's not going to be that way. Our government will bail them out. So yes, I would say that they are messing things up there. Definitely. All right, again, if you guys want to leave comments and feedback, you can always send me questions at tradermerlin.com. That's an easy way to do it. Of course, you guys know I love it when you put comments and questions down below the video. I saw Dennis send in a whole bunch. Dennis Whitworth, one of my friends from on my Trading Academy, posted a whole bunch of comments yesterday, and you're right, a lot of that was spot on. I agree. So guys, feel free to post whatever comments you want down below. If you've got hate mail and you want to say something bad, just email me at tradermerlin@gmail.com. Obviously, I'm trying to tailor this and fix any little issues I might have with the show or content or delivery. But, the learning process as we go. Anyway, hope you guys enjoyed today's show. Happy trading, and I will see you tomorrow. Tomorrow, I do believe I have no guest as well, so I'll start off with that question about Nikola. And here's your homework for tonight. Find out if Nikola Tesla had a middle name, because that's the company we need to start. I'll see you guys tomorrow.